Hello traders, and welcome to another weekly Forex Market Forecast. In this video we are looking at the week ahead in terms of the Forex market, certain commodities and indices, as well as in this weekend's video we will include Bitcoin for you. Last week it was a very clear week for us. The market has reacted exactly as we have expected for the majority of the pairs and instruments, and we had a good start within our member area. You can check out the link in the description in case you want to become a member and receive, of course, much more in-depth detailed analysis and trade recommendations and mentorship through our live sessions as well. So let's start with the dollar index. First of all, we expected last week to see the last push up and then a turn lower, which is exactly what happened. Then we have been expecting a corrective bounce to start within the week, even before the NFP on Friday. So NFP pushed up the market higher and then it rejected lower. So what we can see, it's a small consolidation upwards or sideways for the beginning of the week, and then sometime after Tuesday we should be able to start seeing and drop lower again in the dollar index. So overall our bias for the dollar index is to the downside for the week ahead or so. So we are not going to be looking to trade in favor of the dollar overall. So only looking for sell setups in the dollar index and any related pair, which we will see one by one thereafter. The dollar yen, we have expected from the week before that we are going to see some sort of bounce and push higher in terms of fake out, something similar like this. So this is what the market has been doing again right here. So overall, we are expecting the dollar yen to start turning lower very soon for at least a correction. This correction, of course, we don't know how low it can go, and this is why we do not recommend trading this pair for our members. However, the bias should remain to the downside. Possibilities, of course, they exist. Perhaps even the market can do this, make another push up before it goes down. So this is also possible. Regardless of the case, we are biased to the downside for at least a corrective move for now for the dollar yen. So we are not going to be looking to buy this pair at all or even trade it for our members. For the euro dollar, very simply, we have been expecting from here the market to give us either a small correction lower before the next push up or drop before the next push up. Regardless of the case, we have said from the last week we are biased to the upside for the euro dollar and we will not be looking for any sell setups. As you can see, the market pushed up strongly, so then it pulled back, and what we are expecting for the week ahead is a small correction or consolidation in the beginning of the week, and then after Tuesday, perhaps sometime we can expect the market to push up higher. Perhaps this can be the CPI as well on Wednesday. We will see how it goes. Regardless of the case, we are biased to the upside for the euro dollar for the upcoming week or so as well. Pound dollar, this was amazing for our traders. We have been explaining this pair step by step within this corrective sequence from 8th of March. So you guys know what to expect next. For the public that is watching this video, we have said also from the last week that we have been expecting from here the pound dollar to give us another drop lower before the next push up. So the first push up has started, pulled back, and now we are expecting for this week onwards something similar to the euro dollar, small consolidation to begin the week with, and then at some moment we are pushing up again. So we are biased to the upside for the pound dollar and only looking to buy the pair. The pound yen, we have been explaining for the last few weeks that we have been expecting a pullback or sideways move right here, which was exactly the case once again. Then the market pushed up and then it pulled back. So what we can expect next is some sort of bounce higher, consolidation and higher, which this is not a clear structure. So for our members, we do not like to trade this pair in specific. However, we are not also biased to the downside, so only looking for higher prices in the pound yen for the coming week or so. EURUSD, we have expected this move lower. As you remember, for the last 1 or 2 weeks, we have been saying that very clearly below 19th of March 2024 and 5th of March 2024 peaks, we are expecting the pair to turn lower into a zigzag corrective sequence to the downside. So this is exactly what is going on right now. We have explained that the overall bias is to the downside for the pair. So what we can see for the coming week is possibly a bounce higher first with some rejections again and a push lower later on. Then perhaps it can still do a bounce and another move lower. So this is going to be the overall theme for the pair overall for the foreseeable coming weeks. However, with the overall bias to remain to the downside, and we are not looking to buy this one at all. The forecast has been amazing once again. We have been saying from these levels right here that gold will not make a bigger correction yet, and it will still go higher despite of many people thinking. So this was very clear to us. We have forecasted the whole move higher. We have said it's going to be sideways to higher still. This was exactly the case, and it's still going to remain supported. Even if we get a small pullback, it should still find buyers and for the next push higher for the coming week or so. We do not expect any bigger corrections in gold yet. Should remain supported overall. However, for trading is not the easiest one for entries at the moment because of its nesting and its parabolic type of moves. So for the people that have been buying from here, you can remain long and risk-free. For the people that look for counter trades, this is not the right timing. The market should still pull back and continue higher thereafter. The market has broken up slightly over this channel. However, it is within Fibonacci extension area. From here, as long as it's below 90, the market can still fail and drop lower in the foreseeable future. So this week will be interesting to see how the price action will develop within this area. Possibilities that after a small pullback we can get another high that still exists before we fail for the next push lower. So overall, this area will determine the next move. For our traders and members, we do not recommend any trade setups for oil at the moment until the structure becomes more clear, because anything is possible from this area right here. For natural gas, we have been explaining that the market is trapped between two extension areas, and regardless of the case, it will not be able to push up higher from here. And there is still a fight between buyers and sellers, which is very clearly visible here in the daily time frame. What we have been expecting for the alternative scenario on the blue path, a bounce to fail for another low. At the moment, as long as the market it's below $2 range right here, as you can see, the correct pricing it's always from NYMEX, which is the New York exchange. Anything else is wrong pricing. So we are tracking the correct pricing for natural gas right here. As long as we are below this peak right here in this area, we are expecting the market to give us new lows. Something between 148.8 and 120.28 area, this area right here, before we get any other reaction or a bounce higher. So overall, we are not interested to trade this one because it's a very 50-50 situation with, of course, the bigger bias to the downside still exists before gas can make another bounce thereafter. So we are not expecting anything major to happen within the month of April overall. For the S&P 500 SPX cash index, we have expected this push up for the last few weeks. Then we have said that the market can give us some small pullbacks, which is what seems to be the case. It's possible also that we may see a small pullback before the next push up still. Regardless of the case, we will not be anticipating any major drops for the indices as of yet, and they should remain supported for another push higher at least before another pullback later on. Regardless of the case, we are not looking to sell, and we are also not looking to buy for now. For our members, of course, they get updates Monday to Thursday in the live sessions as well. So if we see something, we let them know if we recommend something for trading. And of course, our performance and results, they have been showing that for the last 2 months, which you can see in the previous videos, until we update you for the next ones that we have up and running and managing into the member area. So regardless of the case, indices overall and SPX sideways to higher, not the best one to be trading right now. There are better instruments for trading than this. For Bitcoin, as we have said from the beginning of the video, we decided to add Bitcoin in the weekly forecast. So what we have been expecting for the members is a continuation higher overall. Now, there are two scenarios in Bitcoin. Either if this low is going to hold from 20th of March, this should be a consolidation right here for the next push higher from there. Or alternatively, there is another possibility in case Bitcoin makes another push lower like this. It should not go much lower, I would say, overall. And from here, we will still get a push higher to make new highs. Regardless of the case, whatever structure decides to happen right here, Bitcoin remains supported and it should continue for higher prices heading into the next month of May as well. So now it remains to be seen within the week whether we're gonna see another push lower or if this will be the beginning of the next push higher as well. First, to conclude the session, we finish up with the ETFs, QQQ and GDX, as you know by now. So for the 3Qs, something similar to SPX and NASDAQ, which follows the similar price action, I would say. Whether we get another push lower and then go up, regardless of the case, the 3Qs should remain supported. So either we make another low and then we push up, or we hold these lows and we have a small correction in the beginning of the week, and by the middle of the week we start pushing higher. So regardless of the case, the 3Qs should still remain supported into a sideways to higher price action for now. And the GDX right here has been pushing up, which is similar to gold after this corrective structure right here. Overall is trading within the cycle from 13th of February 2024, and any pullback should still find support and buyers for another push up, and the market seems to be heading to retest at minimum the highs from May 2023 last year, which is about 35 to 36 or so dollars. So this is where the market should be heading at before any consolidation or pullback to be taking place in GDX. So hopefully everybody has taken value and information from this video to help you out for your trading plan for the week. We do recommend, of course, if you become a member, you will get much more details that we don't and will never show publicly on YouTube. There is a reason for that, because of the detail and experience we share for the members for our paid plans. However, feel free to send us if you have any questions, drop it down in the comments or send us an email at support@roiforecast.com and we'll get back to you within the day. If you have any questions about the membership, all the links that we have are in the description, anything you need. And of course, we do have a recommended broker that we personally use as well. We have a cashback program. You can save up on your trading costs, which is with One Royal. And of course, you get top quality trading conditions and as well as saving a percentage of your trading cost. It's ideal for any serious trader. At the end of the day, you will get the most efficient trading costs overall, so it's better for you in general. And as you have seen from the disclaimer, we are not affiliated, which means we are not making money from your registration. On the opposite side, we give you a cashback on your trading volume, so you save up on your trading costs, so it's a win-win situation for you as well. So with that note, guys, thank you so much for watching. Consider subscribing and leave us a like. Don't forget to have your notifications on when we post a video. The next one should be sometime in the midweek again, which we do usually some educational videos, or expect from us as well very soon to see some podcasts and some interesting interviews, so you can see much more content and value in order to help you become a better trader and get some proper education out there. And we'll see you in the next video, and enjoy the rest of your weekend.